And we're live.
Good morning, good afternoon, good evening. Where in the world you are, it's time for Rogue Money Interviews, and I am your host, V the Guerrilla Economist, and I have with us our special friend, someone who's no stranger to the mothership over here, the underground guerrilla cave that we broadcast this program from. It's none other than Charles Hugh Smith of Two Minds Blog. Check out his work; he's a frequent contributor to Zero Hedge as well, and we are also privileged to carry his articles as well. Charles Hugh Smith is the man. He's written countless books. You can go on his website, go to Amazon, support him by purchasing his books. I love Charles, love his work. He's one of the sharpest minds that are out there, and he is a wellspring of common sense information and libertarian ideas and freedom-centric values. And with that being said, Charles, how are you, buddy?
Hey, thank you. What a lead up. I should just say
I always give the best lead up. Everybody says
I
that.
know. It's incredible. I just can't help myself. That's really what it all boils down to. I just have to keep writing stuff, you know?
That's it, man. That's awesome.
Yeah. So here we are in the midst.
Happy New Year.
Yeah. Happy New Year. And we're in the midst of another gigantic cryptocurrency slump. In which every day or two there's another slam that the South Koreans are going to ban everything. They're going to destroy exchanges. They're going to limit it to grandmothers who are over 6'12". I mean, you know, it's one thing after another. You know, I mean, well, 6'12" is 7 feet. How many grandmothers are 7 feet? Oh, well, everybody's banned from using cryptocurrencies. And so what do you guys make of this? Is this just a standard run-of-the-mill slump that's a healthy correction from a bit of euphoria, or is it something more ominous?
Well, I think in terms of ominous, I mean, there is something ominous, but the ominousness or the homonymity or whatever the heck you want to call the word, the ominousness is really not, you know, centralized to Bitcoin or cryptocurrencies in general. I think the ominous cloud that we're seeing is really over the financial markets more than anything else, Charles. I think it's over the stocks. I think the ominous cloud is floating over the bond market, you know, and I don't care if they bring it down to 20, 30,000 points, you know, 26,000 or 30,000 points. It doesn't matter. You know, it doesn't matter if they brought it to 35,000 points because you and I have been talking about this for a while. You and I have both been writing about this for a while, Charles. You know, we talked about, you know, the bond market and the fissures that are in the bond market. We all know it's built on, you know, complete fabricated nonsense. Everybody walks around the market today, knowing that everybody's walking on eggshells, knowing that the bond market is completely fake. So it doesn't matter how high stocks go. So the ominous cloud is over there. In terms of cryptos, I see this as a welcome correction. You know, and CJ could verify this. Back in December, back in November, I was saying I expect Bitcoin to dip below $10,000 before the year is out, or even in the beginning of 2018. And that's exactly what happened. I think number one, it's a buying opportunity. I knew this was happening because Wall Street starts hedging its bets. You have those ETFs that are open. A lot of the ETFs, especially the ones that are going, the next calls that are going out for next week on the 26th of January, they're all calling for a higher Bitcoin price. So they're going to have to do a sell-off. The big money wants to make profit. So the ETFs are selling off. And then plus whatever fear out there to scare people. A lot of people were dumping cryptos, getting freaked out by it. I think it's a wonderful opportunity. I mean, isn't it the Chinese word the same for crisis is opportunity as well? You know, so that's what I take it, Charles.
Yeah, no, I think that's a good one because there's so much activity in the blockchain technology space. I mean, it boggles my mind. I saw a tweet from some guy that's been in China, an American guy exploring the blockchain development in Shanghai and Beijing, and he said it feels to him like the energy level's 20 times what it is in San Francisco, which is very high already, right? I mean, San Francisco is like startup and blockchain, you know, capital of America, as far as I can tell. So anyways, it's a global phenomenon. And so, yeah, I think we have to look at any kind of 1 month of volatility up and down in the context of how is this long-term revolution going to play out? And so I agree with you. I think there's opportunities. And for those people who are willing to do the research, then you can make your own assessment about what coins are undervalued and which ones might be overvalued and not the same opportunity. So yeah, do your due diligence as usual. Well, let's talk about financial repression too, because if there is a dark cloud over the cryptos, it's the same dark cloud which we call financial repression, right? Like that the centralized governments and central banks are attempting to snuff out anything that they don't directly control.
Right. Absolutely.
Yeah, and I've done many programs with Gordon Long and other people on what else is financial repression. I mean, what does it mean? And you go, well, you can start with like the war on cash. Like, let's get rid of cash because we can't track it. And we can't force people to spend money or borrow more money, which is their entire reason to live, right? Is to try to force us to spend all of our money borrowing more from banks so that we have to pay banks interest.
Right.
And tracking every dollar that we have so that it can be taxed anywhere in the world. And I'm all for paying, taxes on the money that we make, but I don't think that requires financial repression on the level that we're seeing. So yeah, financial repression of cryptos, that's what everybody fears, but it's of the same sort of general mentality against everything else. Right? It's not just cryptos, it's cash and anything they don't control.
Correct. It is the financial repression is what they're trying to do. And I think Roger Ver said it best. It doesn't matter what bureaucrats in far off lands and in far off countries, what laws they make. It really doesn't matter anything, because we the people have pretty much left these idiots behind. We that are the enlightened ones, we that are the awakened ones, we are the ones that are embracing the new multipolar world, embracing the new decentralized reality. We left these guys behind. We don't care what laws, because they're not going to. There's no way, and I want somebody to explain this to me in a very straightforward and concise way. Unless you're putting your cryptos on a centralized exchange, i.e. your Coinbases, your Krakens, and whatnot, I see no way that if you were managing your own cryptos and you were utilizing the very, myriad of different workarounds and applications and products and services that are out there that are available, there's no penalty. There's nothing. Nobody could, tax you. Nobody could do anything to you. Nobody could take your currency. Nobody could hack you. Nobody could do anything. So, those are the people. And I think this is why it's so important, and why the crypto school that we created, the cryptoschool.io, is also important. It is so vital that people understand how to utilize cryptocurrency and know the ins and outs of it more than anything else, because the only way to protect themselves against the typical confiscation, against the typical taxation, against the inflation, all these other things, they will try very hard to control this whole entire thing, Charles. And that's where we're seeing the reverberations, the sell-offs, the slog, the slumps in the crypto market that we're seeing today. But remember what Satoshi says: every attack against the blockchain only makes it stronger.
Right. And it along the same lines of what you just summarized, I just saw a link to Nassim Taleb coming out and saying that Bitcoin is a great advance because it's basically anti-fragile, which is, of course, his line of thinking. It's not controlled by any central organization. It's controlled by its user base and its network. And, one of the things that you guys are, crypto central, right? So you guys are right in the beating heart of this sector. And so it probably, most people are aware of the space, and probably many other people personally are invested in it, or at least actively exploring it. But out in the rest of the real world, very few people actually own this. I see tweets from financial people that I respect, and they say, you know, I'm sick of reading about Bitcoin. And I'm thinking, okay, I understand it. You know, everyone's sick of Bitcoin, Bitcoin, Bitcoin. Oh, with Ethereum and Dash and everything else tossed in there. But how many people in the real world actually own any and actually have paid people with it and used it? And I think the number is vanishingly small. I mean, you know,
It is.
yeah. I mean, I don't know if anybody's done a survey, but I personally only know a couple of people of people I know that own it. So I think the penetration into the economy is still extremely narrow.
Yeah, I mean, it's not a lot of people use it. There's more users and utilizers of cryptocurrency abroad, in places like Eastern Europe and in Asia, and the emerging market are feverishly, grabbing cryptocurrencies because for most people, it's their only leg into the global economy. But in terms of the average American still doesn't get it. Maybe like 0.001% actually utilize Bitcoin. There are more people that understand the usage of gold and silver as currency than they do understand what Bitcoin is, or if they heard about Bitcoin, they don't even know how to get it.
Yeah,
So that's what
exactly.
we're facing these days, Charles.
Right.
Yeah.
And V, what have you come across in the last month since our conversation in the blockchain space, that you found of interest? And of course, the context here of reason why I'm asking is we all know the future is decentralized and opt-in. In other words, like self-organizing networks that aren't controlled by centralized hierarchies that benefit the few at the expense of the many. And so that's what we're all hoping that blockchain can enable. And so I'm a member of like Colony.io, and you know, there's dozens of great ideas and development teams working on applications for outside of cryptocurrencies on blockchain. I mean, is there anything that struck you as particularly noteworthy in the last month? I mean, just for my own education.
Yeah, I think one of the biggest things that has really got me within the last month or so is the continued advent and development of not only atomic swaps, but also what I've also looked into and that's really captured my attention is basically peer-to-peer Bitcoin exchanges. Okay, which is again kind of like the atomic swap, but the build out of it, and organizations like BISC Network, and I recommend people go to check out BISC. That's spelled BISQ. Charles, you've probably heard of them. Amazing developments that are happening in this place. Which these are people that are, and developers are pushing the forefront of keeping the not only the cost down to just pennies for transactions, or even free in terms of transactions, but also keeping it decentralized and with a robust decentralized security grid that just makes it so much easier with the safeguards in place for people to just directly move in and out of crypto to fiat and fiat to crypto back. I think that's one of the biggest things. I think the continued development and things like that, peer-to-peer, crypto exchanges are the forefront in the future of what we finally need to do to put the nail in the coffin when it comes to the banks, man. I think that's vital.
Yeah, right. And let's talk a little bit about the banks. I know people have probably heard this a million times, but it's worth emphasizing. I think even if you have heard it 100 times, is the whole financial system is set up on the notion that these very big privately held banks, the big money center banks, are the trusted intermediaries of everything we do financially. In other words, they're the trusted people that we pay to complete and verify all the transactions we do. And of course, we all know that they're far from trustworthy. They've all been indicted or have settled with the various regulatory agencies in the billions of dollars for various kinds of fraud. I mean, I'm laughing because it's like they're just so ludicrous. If you wrote a movie story about like Wells Fargo creating millions of fake accounts to bill people for services that they didn't ask for and didn't actually get, you'd say, wait a minute, that's such a dumb idea. No big bank is going to get away with that. That's dumb. Oh, well, they did. So much for our trusted layer of intermediary, money center banks.
Exactly. I mean, in terms of trusted layer, Charles, I like to call them the crusted layer, crusted in criminality. Man, these guys are incredible. I mean, think about just the gall. And you know what? You know why they do that? You see, everybody looks at Wells Fargo and Wells Fraudo, as I like to call them. Excuse me, just tooling around with my mic, trying to get it right here. But people call them Wells Fargo. I like to call them Wells Fraudo. And the reason for that is this: people, everybody looks at the fact. Okay, they create all these billions and millions of false accounts. These false accounts that nobody owns. These are fictitious accounts that are used using actual people's names. And then they're billing the people for the freaking services. People are like, wait, I never opened up an account like that. What the hell's going on here? And they get fined again and again and again. And then CEOs are stepping down again and again and again. Executives are getting, but the problem persists. And the question becomes why? Why? And I gave the nugget to this answer, I think months ago when I first heard it happening. Banks that are like Wells Fargo and many other, like the other bigger banks like JP Morgan and Citigroup and whatnot, they have a massive solvency crisis. They have a massive solvency problem. Some banks are better able to manage that issue than other banks. Wells Fargo happens to be one of those banks that just does a terrible job of trying to manage their derivative books, okay? So what occurs is this: how the heck do you get instant liquidity when you're a bank? Well, simple. We all know the truth, guys. When you open up an account at a bank, whatever money you put in there, they will go ahead and they will rehypothecate. And using the power of fractional reserve lending, we all know that if you put $100 in there, they'll loan that $100 out 9 times. But when it comes to rehypothecation, they can rehypothecate whatever is in that account up to 140 to 150% in the United States by law and regulation. So if they open up these fraudulent bank accounts, put like $20 in, put up $100 in, they can leverage that 150% over, 150 times over. So you have millions of accounts that are fraudulent accounts opened. Now you go ahead and you rehypothecate, you put that in your derivative books, boom, voila, instant liquidity. That's why they're doing it.
That's a great explanation of the sort of pyramid scheme, if you will, of bank leverage. And that brings another point up. Listening to your explanation is that in the good old days of a few generations ago, banks and savings and loans and credit unions were viewed more or less as utilities. In other words, they were sort of like the municipal water supply. They charged a very small fee. They kept the mortgages that they originated, and they weren't these enormous financial centers of profit. And the whole financial sector was around 4 or 5% of the total economy. And now, depending on how you measure that sector, because companies like Apple are in a sense part of the financial sector now. I mean, they have so much cash, and they're playing around with it just like they were a money center bank, that the financial sector is more like 15 to 20% of the economy. So how did it get there? Well, because the whole goal switched from being a sort of public utility with low profit margins and secure returns to maximizing profit by any means necessary. And the key phrase here is by any means necessary, meaning fraud, breaking regulations, offshore banking, you name it. Everything's open to these guys because the whole point is, how do we skim as much profit as possible? And so what I like about the peer-to-peer exchanges and networks that you described earlier is these are sort of, if we look through the lens of a utility, these function more or less as a low-cost utility, which is what we want. We want our transactions to be secure, but we want them to be low cost and without a bunch of intermediaries, and that also eliminates all the potential for fraud, which is the promise of the whole blockchain. So clearly, what we need more of is we need more of the equivalent of utilities and less of profit maximizing, basically gangster organizations.
Yeah, exactly correct, man. And we're only going to get that. We're only going to get that when the Fed is taken out of the way. I mean, look at what central banking has done. Central banking has, increasing and decreasing the credit supply of the United States. over and over and over again, and then leaving to the banks an environment where it's 0%, and in some cases, in some Western countries, negative interest rates. So that, and coupled with the fact that they've eviscerated and put an end to Glass-Steagall, like how do we not expect fraud to happen? You know,
right? It's basically the system is optimized for fraud.
Absolutely.
Yeah,
Absolutely.
and it's optimized by the central banks to enrich the few at the expense of the many. And so, yeah, I wrote a piece that's posted today on Of Two Minds, and I saw it on Zero Hedge, describing that, like, well, one dynamic that might start breaking this whole oligarchy up is, you know, nation states still matter. You know, we know that there's a lot of people that are into globalization and the one world order and so on, but nation states still have their own interests. And so I foresee the coming era in which central banks no longer act in unison and in coordination as they've been doing for 9 years, that they have to start protecting their self-interest, meaning their own currencies and their own economies. And so there's going to be conflict. And so that could be part of the fragmentation that we see happening for a lot of different reasons: technological innovations, social disorder from all the inequality that central banks have created. And now I think that's another force of fragmentation that's going to start rearing its ugly head. Is there's going to be more of the kind of infighting that we saw in the 30s, where nation states have to protect themselves, and that means they no longer will coordinate with other central banks. They've got to do what's right for them, and if they have to shoot some other central bank in the knee, well, hey, you know. So that's part of why I think the thing will crumble.
I mean, you look at it this way. I mean, America is completely bankrupt. There's an insolvent nation. It's a nation where the unemployment numbers are fudged with. The books are cooked at every level. GDP is measured as reshuffled debt. I mean, you name it, we have it going on. Where if an individual were to run their finances or their business in the way this country runs its government, or the way this government runs this country, that entity would be shut down. Its chief executives would all be jailed. You know, it's incredible. It's totally incredible. We're a bankrupt nation. Well, that's racking up more debt than any other generation or nation before it. And people think that we can pass the buck. We can't pass the buck because, you know, no matter what, man. I mean, you want to talk about the whole entire thing. We can't escape the death of the U.S. dollar. It's going to happen. It's not a matter of if. It's when. Is it going to be this year? I mean, China's announced the gold backed the petro yuan with the gold trade settlement, right? They're going to launch that. That's a game changer. More and more countries in the Middle East, more and more countries in Asia, they're looking to multipolar leadership. They're looking for Russia. They're looking for China. They're looking for mutually beneficial trade. They're looking for, you know, trade zones like the New Silk Road, the One Belt, One Road initiative, versus what we have, which is what? Like, what exactly do we have going on? I mean, these characters are still in power. I mean, right now the latest news is, Charles, is that the Senate has voted to reopen the government. Now stocks are soaring. We don't know what the House is going to be doing, you know. So these are the things that are going on, and I just want to see any sort of growth that happens. Okay, and I've said this before. You know, if the only thing we get out of the Trump administration is just economic growth, it's only going to be for a forestalled period of time. That's it. Because none of the fundamental problems, it seems as if, Charles, nobody has the balls, the courage, or the intestinal fortitude to deal with the real systemic problems. The fact is we have ridiculously high unemployment rates. The fact is that our infrastructure is completely eviscerated. The fact is that our debt. I mean, how are you going to handle over $200 trillion worth of debt? It's an obscene amount of money. You know, it's obscene. So these are systemic problems, and nobody's addressing the systemic issues. They like to blow it off and like, hey, look, China has the debt bubble over there in their stock market. Yeah, but China's debt is not held externally like ours. their problems are regional. It's not systemic the way ours is. When we go pop, man, we go pop, and the world's ready. I don't think most Americans realize this, but the more people that I talk to overseas, the more I realize the people overseas are ready. They're prepared for the changeover and the transition of the U.S. dollar as world reserve currency into whatever comes next. The average American is not, because he's too busy playing party politics. He's too busy watching NFL football. He's too busy, watching Dancing with the Stars or his latest celebrity chef or something.
Right, right.
So,
well,
severely problematic.
Yeah, and you're right. And the global, the debt problem is global, definitely. I mean, like I stand in awe of the euro being considered a legitimate currency. I mean, for all the same reasons you describe about the dollar.
Ridiculous.
I mean, all of its banks are insolvent. It's got incredible pension problems, due to demographics. And so anyways, I think you could say that it's all the fiat currencies are doomed. And so then what we're talking about is what will replace them. And so many people think a gold-backed currency, but other people think cryptocurrencies could play a role. I tend to be in the camp of cryptocurrencies actually might be better reserves than gold. Yes. And because the ultimate test of any gold-backed currency or anything backed by a commodity is you have to be able to convert that into, the currency into the what's backing it. So in other words, people talk about a gold-backed currency. Well, that means you have to you can go to the central bank of that government, and you can say, I want gold in exchange for my paper currency. That's gold-backed. Anything less than that is not gold-backed. Okay, you have to be able to convert it into gold. And so that's quite a high test, because you can't be creating immense sums of debt and way more money supply than you have gold, right? And so the world that would be using gold-backed currencies would have like a huge reduction in economic activity, because we wouldn't be using funny money. And so people like the idea of a gold-backed currency, but they usually don't follow through to the end conclusion, which is the infinite growth model dies as soon as you have a gold-backed currency as your global reserve, right? Because you can't create endless sums of funny money out of a gold-backed currency. Just it's not possible. Yeah. So yeah. I want to. Yeah. Go ahead.
Oh no, I was saying that what China's proposing is gold trade settlement, but for nations, and I think that's going to be the trend, because if you look at the world, it's not like back in like the 1900s, 1800s, even up to before the 1934 gold confiscation, gold and silver were in circulation for the average man. People understood it. Today, how many people own gold and silver? Like hardly, like what? Probably like 0.01% of the entire population, if that. And those that do hold any gold and silver are not holding any sizable amounts. The majority of gold and silver is held by large institutional investors and sovereigns. That's it. So the only ones that are going to be calling the shots is that. So I firmly believe this. And a lot of the gold bugs don't like hearing this, but I don't think gold and silver are going to be used in currency ever again. It's just not. I mean, look at silver. Silver's almost being wiped off the periodic table over here, And so it's what's going to be readily available. And I think the answer is cryptocurrencies, not because it's a digital thing or anything like that, but because of the technology. That's what makes it trustworthy. The arbiter in the transactional model of cryptocurrencies is the technology that is the blockchain, without which you don't have a real crypto.
Right. And as kind of a final topic, I'd like your hit on is the thing that excites me about cryptocurrencies and the blockchain is the potential for localized and globalized payments and currency creation. In other words, you look at an example like Steemit. It's a content creation site, right, in which people are paid with a currency that the site creates itself. And so that's a model that I think we can see the outlines of how that kind of model could replace all the fiat currencies. In other words, there might be hundreds of currencies, some of them localized, some of them globalized. But in every case, the mechanism for the issuance of that currency is transparent. And there's an open, transparent market to discover the value of those cryptocurrencies. And so I look forward to the day when maybe you do some work in your community and you get tokens that are issued only by the local community crypto. And then you also are earning money in doing work in places like Steemit or Colony, you know, these that are basically globalized, meaning anybody in the world can join and earn tokens by doing work that's valued by other members. And, you know, that's a great future to look forward to, in my mind.
Yeah, that'll be the greatest ideal future. You know, one thing people forget to realize is this. You look at the classical gold standard, right, which ran from 1870 to 1912. That is the classical gold standard. That is the gold standard on which the greatest amount of human economic development occurred in human history, or recorded human history, to say the least. When you look at it, right, here's the deal. One of the things that was happening, yes, we had gold, yes, we had silver, but in terms of the banks that were at play at that time, various regional banks, state banks, local banks were issuing their own certificates. And those certificates had a merit of value within a free and open marketplace. So it was very decentralized. You know, if I had a certificate stating that X amount of coins, gold coins, and you can see as I described this how this will pertain to today's modern world. You know, back then, if I had X amount of coins, and here's a certificate from Union State Bank, and I gave it to you, Charles, say, hey, Charles, I want to buy that horse and buggy from you for 4 gold coins, 1 ounce. Here's a certificate from Union State Bank, stamped, signed, sealed, delivered. And you can either give me the certificate, you know, you'll take the certificate, I'll take your buggy. Or, you know, if we're exchanging currency amongst ourselves, there's value in that because of those certificates. So I think we're heading towards a realm of these tokens and these coins being the main means of transactions, because they're underlined and backed by something. I mean, think about it. It's either labor that's backing it, or it's a commodity that's backing it, or it's a technology that's backing it, or a function that's backing it. I mean, if you look at every single cryptocurrency, look at Populous. What is the main thing that's backing, that's really making it valuable? Well, it's a cryptocurrency based on invoicing and the selling of invoicing. That has value to so many businesses. Look at Salt. Salt is lending, right? The tokens have value. You look at so many other cryptocurrencies that are out there, the technology that's in the blockchain, something like Monero, that's what they're selling. So there's either labor behind it, or technology behind it, or there's a commodity behind it. I mean, there's quite a few right now, gold-backed, even silver-backed cryptocurrencies at this point. So the more we have it this way, in the market, I love it because the market becomes the arbitrator of what's legitimate and what works and what doesn't, rather than a bunch of corrupt bureaucrats that have their own political agendas sitting in some ivory tower in a far off place somewhere that we're all completely estranged from. You know, I pray for that future, Charles.
Right. Well, one of the reasons I so enjoy discussions with you guys is your grasp of history. Like we've spoken in the past that, you know, that economic vitality that you described in the second industrial revolution, 1870 to the early 1900s. You know, you've mentioned in the past that that also held true in the late 1700s, you know, after the United States was finally established, and into the 1820s, the era of good feelings, or whatever it's called. I mean, there were just like regional banks, local banks, and people issued their own currency, and that fueled economic growth because people could get credit, and they could use it to invest in greater productivity, you know. So there you go. And so that's really what we're talking about here when we talk about the benefits of a decentralized peer-to-peer financial system, using hundreds of different versions of cryptos and blockchain technologies. Is it's going to make us all more prosperous because the wealth that's being created is not being siphoned off into the hands of the few through financial trickery.
Exactly. Exactly correct. And that's the ultimate power. That's why people need to rally behind cryptocurrencies. It's so vital.
Yeah, and all the blockchain technologies that leverage cryptocurrencies or extend that transparency and decentralization into, as you say, everything from lending to invoicing to content creation. I mean, you name it. And it's and it's an exciting time to be alive. Definitely.
It is the most exciting time to be alive. I love it. I can't get enough of it, Charles, and I thank God that we're alive at such a time such as this, because we're seeing some real needed radical change, and all the changes that are happening right now. It's us and people like us that are pushing the bleeding edge of technology, that is pushing the bleeding edge of human development, that is pushing the advance of human civilization, the much needed. We are basically, what we're doing is we are seeding the ground. We're seeding the fertile grounds of the next jump in human development. And our war is against those that want to keep status quo and want to keep things. And the funny thing is, those that want to keep things status quo, they're obsolete and they don't even know it.
Right, right. You're so right. I love the analogy of seeding a better future. And, you know, a lot of things that were considered utopian have come true. Like, you know, back in the good old days of feudalism, if you were stuck in that system, it seemed like forever and there was no possibility of change. But as we all know, things did change. And so we're in the fourth industrial revolution, and cryptos and blockchains are a key part of that, sharing the wealth and creating more freedom and more opportunity for everybody that's participating.
Absolutely. Absolutely. Charles Hugh Smith. Thank you, sir.
Thank you. Great conversation as always.
Oh, it's great to have you on. Charles, why don't you plug your books as well as your website and how people can follow you?
Okay. My latest book is called Money and Work Unchained, and it's about universal basic income and why we need meaningful work more than we need universal basic income.
Amen. Exactly. Exactly. God forbid if people are productive, right?
Right. Exactly. Yeah. That's right.
Absolutely.
Well, thank you very much.
Charles, always a pleasure, man. It's always wonderful, and I love the conversations we have. With that being said, folks, you can find us on roguemoney.net. CJ, take it away.